Good morning, one and all, and welcome to this morning's video. So this morning I have two pairs on watch, and those are CAD yen and Swiss yen. So my favorite of the bunch, I believe, is CAD yen. So I'm going to break this down from the higher time frames. Not the most typical of higher time frame structures, but there is context to it. So I'll try and break that down now. So on the higher time frames, you can see that we have this high here. I'm probably just going to go into a little bit more detail just because I only have the two pairs on watch. We have this high up here, okay, but that's a long way away from here. This is the monthly chart after all. We break above all these highs, okay, price moves to the downside, and at this point I would have been anticipating the impulse correction continuation to push lower. That didn't happen. We then broke above this high, okay, price fails to commit. We break above both of these highs, and then we get some commitment to the downside. Now you can see that we have rejected these lows and pushed back up. So this is not your typical move to the downside if you're looking to get short, okay? But as we start to drill down, there is context to it, okay? So what we can see here is that we have, as I said, we have all these highs here. We break above all of these, and then we get the impulsive momentum to the downside. So when we get this impulsive momentum to the downside, okay, which smashes through all of these highs and back beneath these lows, even though we've kind of wicked here and pushed back up, because of if we look at what's happened since, first of all, once price broke below these lows and then pushed back up, the question I'm asking myself is, what reason does it have to come all the way back up here if it's washed out all of this liquidity? And you might think to yourself, well, there's a high sat up here, which is true, but we don't normally see an impulse down followed by an impulse up like that, okay? That's just not typically how it moves, okay? So that has given me a clue, especially when we see the retest of the back end of this. So what did price do once it pushed back above these lows? It retested the back end of all of this volume, okay, and then moved to the downside aggressively, okay? So this is suggesting to me that the move we saw here to the upside is just profit taking at these lows, because that was the start of all of this move. The base, the stronger magnet was here. So that's given me a clue that after such a massive move, this was just profit taking, okay? As I said yesterday, if you go on a long train journey, if you imagine one of these train journeys that you go on where there's no interim stops, no stops until like the main train station, you're going to get more people getting off at that main train station than you would if there was lots of stops along the way, if that makes sense, okay? So that's the way I try and analogize it. So we've come back up, we retested the back end of this, and I'm just seeing this as potentially the move up we're getting at the minute. It will become clearer as I drill down. I'm seeing this as a potential impulse, steep continuation, and then a move to the downside to take out this low, which this low near missed too, okay, at this moment in time, okay, because price has shown its hand. It's tapped into this high, retested the back end of that, and then pushed to the downside. So because we've come from a massive impulse, I'm not seeing this as a move that does that, especially when we've come down to leave a near miss to here. So there's a lot to unpack with this trade. You need to be a little bit more experienced, I think, to actually understand it all. I'm still learning, but I think I'm, advanced enough to make sense of these kind of structures. As we drill down, you can see a similar thing again. Okay, so we have this scoop double top up there. We push to the downside, and then you'll see it more clearly on the 4 hour, but price leaves a bit of a footprint here, okay, which just happens to be the retest in the back end of this this low here, which is also more prevalent on the 4 hour chart. If we just zoom in a little bit, as I said off as well, trend lines often point the way to where the liquidity is. So if you look at this, if we really examine this in detail, okay, you can see that this high narrowly missed only by a matter of pips this low here, okay, and this high narrowly missed here. So I'm seeing this as a potential reversal structure where we get the 1, 2, 3, and you'll see a bit of a middle section in here as well for a potential tap into the area to take out the liquidity that's likely sat there, and the liquidity that is likely sat just above here before that move to the downside, okay? So if we just zoom in a little bit, and as I said, one of the reasons I've put trend lines on my charts is, let me explain this in as I've got a bit more time. One of the reasons I took trend lines off of my charts is because I was putting too much emphasis and weight on them, okay, which was causing me to get in between value areas, okay. So what I mean by that is, let's say we have a high here, we have a high here, high here. What would happen is I would see a reversal structure, which kind of does this, which kind of smashes through an area of value and does that. And then I would look for a trade in here, but really it was just, when you zoomed out, it was just between value areas. Okay, so the trend lines were convincing me that this was valuable when I was a bit less experienced, and then I was getting in between value areas. But now I am a bit more experienced. I know not to do that, regardless of what the trades like that carry much more risk. So I'm happy to put trend lines back on my chart and only look to get short from the top of a trend line if it's actually at a value area, as opposed to, let's say, if we had something like this in between here, like that, for example, and then we're in no man's land, we're between these value areas. So I'm happy to put trend lines on my chart, back on my chart, for that reason, if that makes sense. So if we drill down, there, we've got the area of value there, we have the near miss to it. Let's get that bit of squiggle there. We have a bit of a middle section there, which is a bit more clear on the 5-minute chart. So we have that kind of 1, 2, 3, which breaks the lows. Then we push up. You can see we've got this middle section now. Okay, so just separating these structures a little bit. We have a bit of a parallel nature to it now if we were to plot trend lines across these lows. So what I'll be looking for in this instance is the following. I'll be looking for a tap into this area, the area of value, a push down followed by either a 5-minute or a 15-minute continuation, and then depending on which one we get, I will look to get short on the break or within it for something in the region of 4% down to that low. And then my target in this instance would be there. Okay, we have a sharp move there, which just so happens to not only be, so we have if we separate the structures, we have this, okay, and this was the retest of the back of the break of this structure. It was also, you could argue, and if you saw this as one sort of overall zone, it's kind of the retest, the back end of all of that as well. And it's a fairly sharp move as well. So that would be where I would anticipate some profit taking, especially when, if we just measure this range, what's happened there? If we just measure this range, okay, that's about 50% of the range, okay, the overall range, and that is where larger structures typically form as well. So I would anticipate some deeper pullbacks in the area, and I would have something in the region of 10% to work with. Okay, and what I would do, I would measure this range, and then I would set a take profit at the 90% area, whilst simultaneously trailing my stop loss, which would give me something in the region of 8 to 9%. So, hope you like the thought process on that one. Okay, stick that guy back there. We'll see what happens with that one. On Swiss yen, it's going to be a similar sort of deal, because obviously the yen pairs move to some extent in tandem. If we just zoom out, so in many respects, you could argue, because of where we're positioned, if we just zoom out, we're at a much higher area of value overall, meaning that from a kind of swing trading perspective, there's kind of maybe more room to the downside, especially as we have that higher setup there on CAD yen, which we don't on Swiss yen. But given the choice, I'd definitely rather trade CAD yen than Swiss yen, that's for sure. And there's a few other variables as well. But if we just look at this, we break above all these highs, we move aggressively to the downside. If we just zoom in, what I do like about Swiss yen is it's been responding very well to structure. So you can see here, we have this even on the daily, we can see this mini structure here, impulse, correction, continuation, another one here. We then move down, we leave a bit of a footprint, we wick to the area. Okay, this is if you're new to the way that we trade, those of us who trade the Falcon strategy, you can see there's lots of elements of the Falcon strategy at play here to unpack textbook examples. For example, this wick here, we wick to the area and not through it. That means that we're more likely to come up and fill this wick at this high that we wicked to, especially when most of that was wick, most of this candle was wick, and especially when this area narrowly misses the retest at the back end of the previous low. So what happens? We get to that area, we wick to it again there, okay? We get to that area by way of a reversal structure, and then we move to the downside. Price comes down, price breaks below this low, comes back up, leaves a footprint, moves to the downside. So once again, as with CAD Yen, I'm just seeing this move here at this moment in time, unless the market shows me otherwise. I'm just seeing this as some profit taking at this low, especially when you look at how prices moved up. We get a bit of aggression there. We get indecision, not very convincing candle, indecision. So this is an indecisive move up before we've even moved down to the lower time frames. We're seeing quite a lot of indecision. And once again, we're seeing a reversal structure, which just so happens to and a trend line which just so happens to almost point the way to where the liquidity is likely sat, which is the origin of all of this move here, okay? The origin of this kind of running channel, okay? I do like the fact that on CAD Yen, just to touch on it, one of the reasons is that I do prefer the fact that we're retesting the back end of this on CAD Yen, whereas we're not on Swiss Yen. We're not really retesting the back end of anything. That's one of the reasons. But if we just zoom down, you can see once again that we have a reversal structure which lines up with an area of value. Okay, so we have the middle section within there. You can see last night when I did my forecast, which was about there, I was anticipating that this was likely just a retest at the back end of the middle section, that we'd likely push up from there, which it's appearing at this moment in time we are doing. Okay, so what I'm going to be looking for from this pair is the following. I'm going to be looking for a tap into that area, the same thing as I was looking for from the other pair. Okay, so we have the 1, 2 near miss to that high, push up to the area, a 1 hour impulse down followed by either a 5-minute or a 15-minute continuation, and then I would look to get short on the breaker within it. In this instance, it looks like we'd have about 4% to the low. Usually needs a slightly wider stop loss with Swiss Yen just because it wicks about a bit, so you need to take that into consideration. And then down to that low, we would have something in the region of 7%. Okay, again, you could set your take profit at any of these lows, but with Swiss Yen, it's one of those pairs that I would rather be sort of in and out a little bit more quickly. So we have, a sharp move there, which is over my 5% take profit threshold. And one of the things as well is Swiss Yen. With Swiss Yen, is it's not a pair that I would really like to hold overnight if I could avoid it, just because from memory, I think the spreads get up quite high on Swiss Yen. So that's another reason why I would take profit a little bit sooner, assuming we did actually get down to that area before the end of the day, which we may not. Okay, so that's what I'm going to be looking for from these pairs. I hope you've enjoyed the thought process and the extra detail that I've been able to go into by virtue of the fact that I have less pairs on watch today. But for now, have a great day, and I'll see you again in the next video, which will likely be made tomorrow. Enjoy the rest of your day.